if you're a Section 8 property, for example, no one earning over 50% AMI can reside in that property, and you have to income qualify. There's a lot of burden to.
Does that include the orange and green ones that were called out at Light Horse and Cornerstone
Right,
as
well, so that's another type of housing. So there's Section 8 and then there's tax credit. So those orange and green and yellow bars, that was really more referring to sort of tax credit.
And that's the one I'm asking about. Can anyone live in there, or are they restricted?
No, you
by
have to income and,
You have to qualify by
Yes.
income, okay.
yes. And it's
So they are available, they're not squeezed out by richer people taking those units?
No, there
Okay.
just aren't really.
We just don't have
in
that
Shorewood.
many.
Yes, yes.
We have one, like, later.
And it's
Yeah.
17 units and,
Oh,
and
it
it's
wasn't on
not,
Cornerstone
It's a
then.
522.
Understood.
Yeah.
No, Cornerstone isn't in there, just like ours.
Yeah.
Oh, okay.
Correct.
there are no traditional tax credit units within Shorewood.
Okay. Sorry.
Yep, no problem. So, for example, if there was a tax credit development that was built, there are federal guidelines, and then the state implements the program. So there are federal requirements of income and income qualifications and rent restrictions. You have to qualify every year. It's a fairly burdensome qualification process. The
Okay.
IRS administers it. You can't be out of compliance. And then the state also has oversight and actually allocates the credits.
If you start earning more income, do you have to move?
There's no, actually, it's a good question. It's kind of, they have the policy of, once you initially qualify, there is a threshold, but it's not as if, so let's say you're residing in a 60% AMI unit, so you have to earn less than 60% to live there. If you get a raise at your job and you all of a sudden, 6 months into your lease, start earning at 70% of AMI, so they certify every year. When your next certification comes up, you will not be kicked out of the property. There's a provision up to 130% of AMI, so that you can earn up to that before you would not qualify and would need to move out of the property. And they do that to protect tenants.
Yeah.
To initially qualify, you need to be below the threshold. All right, so kind of talking about demand a little bit more broadly. So in terms of forecast demand, the state of Wisconsin has published some data about what the forecast is based on population and household trends, and then taking into account the amount of construction that has occurred in recent years on just a total net basis based on limited assumed population growth and the amount of new units that have historically entered the supply, which is fairly nominal. It tends to be just infill or replacement housing that has sort of come in, or maybe a new multifamily project. But essentially demand will be met when looking at the units on a total basis based on these forecasts. But the issue really comes down to where are gaps within the existing housing stock. So kind of as we were talking about with units that are affordable, obviously there are significant gaps there, both for sale and for rent. There's also a gap in terms of there's been relatively limited new construction housing, fully renovated and updated older housing, again, going back to kind of the affordable units. There's a gap for rental units kind of in those kind of more low to moderate income, kind of the typical affordable rental rates. Limited senior friendly supply, both owner and renter occupied, and then there are no housing developments for adults with special needs. So those are kind of some of the things that we've identified in terms of gaps within the supply. Given the lack of developable land, given overall demand, our assumption is that affordability is primarily going to be, the biggest concern moving forward. And that's mainly due to existing gaps within the present affordable or present housing supply.
Rachel, that 45 units per year since 2010, that would seem to me to be an overestimate of the number of units that are going to be added to the community I think that was probably the most active period for the community.
Sure.
In terms of adding units. So I'm curious for your thoughts on, because I'd like to have a good estimate there to know again if we're gonna be sort of ahead of or behind.
Sure,
Could you
sure.
look at a longer time frame, or what would be your thoughts on?
Yeah, we can go ahead, we can look at a longer time frame going back to see more over time, what that construction rate is, cause I agree, I mean, the 45, you have had some new multifamily within the past 10 years that would, you know, potentially skew that upward, so I think that's a valid point. We can go back a bit further and see and maybe come up with, you know, see if a slightly lower projection would make sense. I think at the end of the day, I mean, I know the number is important for your planning and policy purposes. I think at the end of the day, the point sort of stands that I don't think it's gonna be a situation where on a total units basis, you're gonna have a situation where there's a significant swing in either direction in terms of surplus or deficit. The issue is more among those, among the existing supply where the gaps exist.
Okay, yeah.
But yeah, I will look at that number for the forecast.
I had a question too about the gap of renovated, updated, older housing units, because at one point last year, I looked at the, 20 or 30 houses that were for sale in Shorewood, and I would say like half of them were, a good number of them were flips. Just using the flip gray paint, you know?
Yes.
Which I used to say, is this a flip or not? But I mean, I know on the west side, a lot of the houses are, I'd say a good number of the houses for sale are flipped.
Yeah.
Maybe not 50%, but.
No, there's one there was one on Maryland that was done this past year on the 4100 block, another one on Prospect on the 4200 block, so.
There's
wouldn't
the one
say
next to
I would
me.
say it's more like 10-15% of the one that are true flips. I mean, of all the houses on my street on Sheffield, we've sold what, 9 houses in the last 18 months, and one of them
Was a flip.
was a flip.
Mhm.
You know,
That hasn't closed yet, though, it hasn't closed.
has it not closed? Okay, yeah.
I've noticed on the west side where, you know, the prices are lower to begin with, like the house next to me, it's a bad flip, but it's still on the
It
market,
really-
but
that's sad. That's sad
it's still
to see.
been on the market for over a year,
Yeah.
but it's.
Is that the thing on Wilson?
On,
That they left one wall?
Wildwood, on 4400
That's the Whitefish
block
Bay
of
one.
Oh, that
Wildwood.
is.
Yeah, anything that sells for less than 250,000 is potentially a flip, because you can actually make money doing it.
Easy.
It was interesting, the house across the street from me
Little Cape Cod.
did not sell to a flip. That, someone bought it, and it's not great, and it was a.
How do you feel about it?
Because I went through it, and someone did a handyman special remodel on it probably 15 years ago, and it's been a rental house for 20 years. So it's just not nice inside. I mean, it's shoddy work. It's not good.
But it was affordable.
But it was affordable. Kind of to that point, it's like it's affordable because it's kind of crappy. It's not affordable and nice.
That's what I did, I looked at what it sold for and then what it was for sale for again, and if there was like, 75,000 more than what it sold for, I said, okay, that's a flip, but, so, I didn't do it on the gray paint, but.
Yeah, so the people who bought that house, I think are fixing it up a little bit. It's a family, and they're doing a little bit of work to it, but they are not, they bought it to live in it, and that's great. But a lot of times you do see the more affordable, I'd say below 250 in the village. Or if it's on the east side, then the economics change a lot.
It's
Yes.
interesting, though, so if an affordable house does come up and a family wants it, and a developer comes in or a flipper comes in with an all-cash offer, well, there goes your affordable housing supply.
Well, and that
Right, 'cause then it goes
that
back.
happened on Woodburn just recently.
Yeah.
It was a $220,000 offering, and it was a cash purchase by somebody that's been renovated, and,
Yeah.
I mean, there's nothing
No,
we
we-
can really
yeah, we
do
can't do
about
nothing
it.
about the market.
Yeah.
So question 6, how are the following groups impacted by current and future housing needs? So this just kind of goes through kind of the 5 sort of primary categories that were identified. You know, as far as seniors, the most recent addition to supply is an age-restricted property, the Oaks, high-end, market rate. This gap is likely to grow over the foreseeable future. You know, you do have some growth within that population segment in the 65 and older. Clearly, there's strong demand for this type of housing and for that property. Families, I think demand will continue mainly to be generated by, you know, the desirability of Shorewood, particularly the schools, and, you know, some of the concerns there are kind of what you all were just talking about in terms of the lack of affordable owner supply, certainly. Persons with special needs, essentially there is no housing that's targeted to this population group within Shorewood. The nearest special needs housing is going to be in Milwaukee. You know, that's certainly a notable minority, but something I guess to take into account since there is no housing specifically targeted to this population. And then students, you know, enrollment numbers at the university do seem to be declining somewhat. However, what really seems to be driving the need for student housing that we're seeing in Shorewood is that the lack of, you know, quote unquote, dedicated student housing provided by the university is drawing students to, you know, live within Shorewood. So I think over the, you know, certainly midterm, it's still going to be a concern in terms of housing need. And then young professionals. So overall, walkability, demonstrated success of new market rate properties like Light Horse, Mosaic have, you know, demonstrated really strong occupancy, fairly rapid lease up, waiting lists. You know, it's clear that there's a market for this type of housing targeting this population group within Shorewood. So what impact, if any, has development within the past 10 years had on the housing market? So recent development is primarily market rate rental properties, so kind of the three that we just talked about. And then commercial development, Metro Market on Oakland Avenue, kind of summarizing sort of some of the major developments. So the impact of the new market rate supply is kind of that downward pressure on the older rental housing stock that I was talking about, which could lead to the potential for more naturally occurring affordable housing units, which I think is a good thing in terms of increasing that supply kind of at the lower rent levels. You know, as we've kind of seen, there is a deficit, so anything that can kind of increase the amount of housing available to households at lower income thresholds would certainly help with the affordability aspect. And then just something to consider, this is not, you know, something good or bad, but with new additions to the supply being primarily rental, Shorewood obviously already has a fairly high renter percentage, higher than comparable communities. So if supply that comes into the market or the supply that has come into the market has been primarily rental, that is just sort of further reiterating the fact that rental supply or the rental percentage is high in Shorewood. Just something to think of from a policy perspective. Okay, so
Rachel,
yes,
sorry, just one
that's
quick
right.
question. So the impacts, so that the first bullet, new luxury market rate units, and then price pressure on older rental housing stock. Are you saying that the recent developments are putting price pressure on the older rental housing stock?
Yes, that the new supply, is and will continue to put price pressure on that older housing stock. To the extent, you know, that the market's going to permit it too. I mean, another thing is the vacancy rate in Shorewood is very, very low. So, you know, a lot of that's just gonna be driven by the market. So if an owner can rent the unit at a higher price, obviously they're going to. But as more new supply is added, in theory, that should be putting downward pressure on those units.
So you're just saying just natural supply and demand, we've got
Yep.
increased supply of these newer, better units, so by definition, okay, the demand for those older units would go down.
Mm-hmm. Correct, correct.
But the vacancy probably won't change, cause there's so much demand that
Yes.
even though the demand might go down, there's still a waiting list essentially, so.
Right,
it would have
right.
to
The
go down
vacancy-
a lot for it to actually affect vacancy.
Correct, correct. The vacancy rates are very low. Vacancy rates are very low. So the next
So
question.
so this would be a positive with respect to affordability.
Correct, correct, correct.
Okay.
correct. So the next question is on the short-term rental market. This was something specifically that we incorporated into the survey as a result of kind of the village's desire to see what impact Airbnb and other short-term rentals have had on the market. So there are a total of just over 6,300 housing units in Shorewood. So we did a survey in December 2019. We kind of combed Airbnb, VRBO, and then just those are really the two primary sources. I'm trying to think if we looked maybe at Craigslist, but I think it was just those two primary sources. And at that time, there were 11 total units listed on those sources. And one thing that I do kind of want to point out here is, so there were 11 short-term rentals, which is a low percentage of the overall housing stock, but what we found interesting was that, some of these rentals we don't think are sort of semi-permanent into the Airbnb or VRBO supply, because several of them specifically said they were just renting out for 1 week for the DNC convention. And so I don't, it's hard to say if that's, someone that's really, if they're just saying they're renting the unit for that 1 week, it might just be sort of a one-time thing, and they might not, ever really rent that unit aside for an extraordinary event like that.